Monetary easing versus fiscal austerity is one of the hot topics currently being discussed at the World Economic Forum. Do you go the British route or do you go the American route? Certainly the American route seems to be paying dividends at the moment if you look at the market and looking at the economy. The CNBC team caught up with the Central Bank of Nigeria Governor Sanusi, Lamido Sanusi, to discuss his views on the debate and also the role central banks have to play. Here's that conversation.
Well, I'm a bit worried that central banks may be exaggerating the possible long-term influence of money supply. I don't think we can print our way out of a recession. Many of these issues are structural. They require not just fiscal reforms, but also improvements in productivity and competitiveness. The idea that the US Fed and the ECB and the Bank of Japan can just print money and that can lead to growth on a sustainable basis without building up inflationary pressures is a big problem for me. And the fact that a lot of that money still finds its way into the capital markets and back to the same kind of risky assets that create a wealth effect and the same boom-bust scenario suggests to me that in a few years we're going to see the negative consequence of that. And if we have a global currency war, we saw that after the Second World War, I'm not sure that that is the way to go.
So where we've got this debate raging between monetary easing and fiscal austerity, it's fiscal austerity that you're advocating?
I know, not really. I think a lot of the time the questions are not even of austerity, but of what type of spending you have. In many places, you can actually reduce or reallocate spending and redirect it into areas that address the structural problems rather than advocate an absolute decline in the level of fiscal spending. My sense is that a lot of the spending is wasteful and not productive, and that is really where the issue is. How do we identify what is productive fiscal spending? But government spending at a time of recession is properly counter-cyclical. I think the idea that you should go into deep austerity when you have a recession is repeating the same mistake of the Second World War, and I think Greece and Europe are making a mistake in that sense.
So let's take a look at Nigeria within that global context. I mean, what kind of update can you give us on with regards to the Bankers Committee and the kind of risk management that we're seeing being pursued right now to ensure that we don't see the same kind of crisis we saw back in 2009?
Well, first of all, risk management and governance are an ongoing process for us. We have recapitalized the banks and there's liquidity, and AMCON has taken off. We've put through a number of banking reforms. We have broken up universal banks. We're separating and ring-fencing retail deposits from risky speculative activity. We have strong guidelines on renewal and approval of CEOs and directors, and we'll continue doing that. We're improving transparency with IFRS. We're moving fast with risk-based supervision. We've even gone into cross-country supervision with our partners in Western Central Africa and other parts of Africa. So that is an ongoing process. But of course, we're dependent on progress on the wider economy, the power reforms, the petroleum industry reforms, the agricultural reforms to enable farms to diversify their asset base.
Yeah, it's interesting, you mentioned the adoption of international financial reporting standards and that coming through. We've gotten your view there, and it's interesting because it comes at a time where we've had the CEO of JP Morgan Chase right here at the World Economic Forum stirring things up already, hitting back at policymakers and new regulations, saying that some of the rules have simply made things more complicated and many of the problems have not been fixed. What are your comments to that?
Well, two things. First of all, I think it's true that the problems that happened in 2008 were not really problems that were purely things you could fix by changing the rules. I mean, first of all, there were underlying philosophical issues. Mm-hmm. The fact that you'd allow banks to decide how much capital they hold and calculate their own risk was a very bad decision in the first place, because bank management and shareholders tend to serve their interests first, rather than the interests of the depositors. And the regulators, I think, in Europe and America simply abdicated responsibility under Basel II. I think that has not been accepted. But also, I think the banks in Europe and America have not quite come to the realization that they were responsible for this mess, that they